Exchanges. The actual exchanges themselves, you can buy insurance privately, just like you do now, where we just broker the insurance. Individuals can still buy individual policies privately through the insurance company's website. All that stuff is still available, or that can be done in the exchanges. They can, and kind of consider the exchanges to be websites. They can go online and buy individual insurance there. You can buy group insurance there. Still, the actual underlying cost structure is the same. Brokers still make commissions either way. Both are subject to the same mandate. So there's really not a big difference, at least in Arizona, of whether you buy something in the exchange or outside the exchange. I'd probably say in the exchange is just going to be more bureaucratic, but the actual products aren't going to look that different. Depending on the way the regulations go, some of the tax credits may only be available if someone goes through the exchange, but that's subject to review. And then the only other thing with the exchange is probably every individual person based on their age is going to get a different rate year by year, whereas outside of the exchange, you'll probably still see composite rating, you know, where here's your employee only rate, here's your employee plus family rate, like you're used to now. Okay, grandfather plans, very quickly. If you, like he said, if you like your plan, you can keep it. Well, that's really not true. If you like your plan, you probably can't keep it. You have to be on the same plan since March of 2010. Pretty much no changes at all involved. Minor changes. If you change your co-insurance, if you increased your employee contribution more than 5%, that automatically disqualifies grandfathering. And the grandfathering plans aren't that great anyways, because the really bad things still apply to the grandfathered plans anyways. And also, lastly, the carriers may not offer the plans that they offered 2 years ago because they have to comply. So the whole concept of the grandfathered plans, really not a lot of people are going to be using those. Okay, so let's talk about some good things, because I feel like a little bit of good here. One good thing that's going to be happening is, I believe, self-insured plans, or partially self-insured plans are probably more accurate, are going to make a huge resurgence. So I'm not going to do a whole class on self-insurance. A lot of people say, oh my God, self-insurance, what if someone gets cancer? I can't afford that. All self-insurance really is, or partially self-insurance really is a plan where we set it up for you. You as the employer, you have a high deductible. Maybe you take individual claims up to $20,000, $25,000, and the employee takes a deductible up to $5,000, and there's a lot of different ways to skin that cat. But so you take a little bit of risk, but your premium is a lot lower. I mean, right now, the employers that are over 100 employees tend to offer a lot of self-insurance plans because it's just cheaper. They have more control over their costs, and it makes a lot more sense. And they can design the plan the way they want it. So I believe self-insured plans and partially self-insured plans are going to become more available for smaller employers. Just because, one, because it gives you more control over your costs and saves you money, and number two, more importantly, it gets you out of a lot of this stuff. Still required some of the minor things, no lifetime limits, okay, we can live with that. No copay for preventative medicine, well, that's pretty much what a lot of you guys on HSAs already have that, so that's fine. Children are covered up to 26, okay, that's okay too, that's not going to kill anybody. No rescission of coverage except for fraud. That's bureaucratically painful, but not really that big a deal. The important thing is on the not required side, here's all the things that self-insurance gets you out of. The whole minimum essential coverage, which is going to kill the HSAs. By the way, the HSAs are the only thing in the last couple of years that have contributed to rates going down. A lot of you guys that are on HSA plans, you've seen very small increases, and some of you have even seen decreases because you're actually, the government got it right for once. They created a plan where employees can cost share and actually look at what they're doing and ask the right questions and make sure they're not going for unnecessary tests and shop, is this prescription cheaper than that prescription? And as a result, that actually has been a very productive thing for health insurance. So what does the government do? They want to get rid of the private market, so they're getting rid of HSAs. Well, with self-insurance, HSAs are still an option, even if you're over 30. Gets rid of the medical loss ratios, gets rid of this rate limitation on age limits and all that kind of stuff. It gets rid of some of the fees that the federal government's going to charge, and it gets rid of the concept of guaranteed renewability so that you can actually have insurance like the old days, which is, I mean, today's scary that today is still the old days and we're worried about 2014. So with self-insurance, and I'm happy to talk to you guys about different options, it really avoids a lot of the potential issues that we're dealing with. Okay, so preparing for 2014. A lot of things. We talked about some self-insurance. Let's talk about what companies are looking for as ways to deal with all this. Well, number one, partially self-insured plans. That generally, we just talked about self-insurance, that generally works for healthier companies, larger companies, but again, those things are going to be becoming more available as 2014 approaches. Service groups, that's something I can talk to you guys in detail. That's a little questionable, but what some employers that are north of 50 are looking at doing are having some of their crews basically operate as their own companies and just pay that crew as a separate company, not have direct control over their employees, and that in an effort to get below the 50 count. You got to check with an attorney. You don't want to do something that you're doing just for purposes of evading the rules, but if you have a good business reason, your attorney may advise you towards that. Dual option plans, we talked about that. If you have a fancy plan and a cheap plan, then it's much easier to qualify as an affordable plan, at least on a cheap one. And then, if your employees take it or not, you could be 100 employees. You could offer insurance and have 3 of your employees take insurance. 97 of your employees aren't taking insurance. And you can be in a situation where no penalty, no fine, no nothing. So the idea of a dual option plan definitely helps that. Dropping coverage, generally not recommended for the math that I did before, plus you as business owners still need insurance coverage. So, and also, you really don't want to be in a situation where you're paying $140,000 where you could otherwise be paying $10,000. Managing your size or hours, a lot of employers that are just north of 50 are looking to downsize and be at 49 employees. A lot of employers that have people working 35, 40, 50 hours a week are just looking at managing and keeping people to 29 hours a week. Again, you don't want to do anything that impacts your business, because at the end of the day, we're here to run a business and you need the number of employees and you need them to work the number of hours. But to the extent that you have the ability, that you think there's an ability to manage that process a little bit better, we can help you with that. We have a time and attendance system. We can keep track of who's working what hours, who's getting over thresholds, and help you manage that puzzle a little bit to make sure that you're not breaking the bank. Target affordability, I can talk to that in more detail, but there's really nothing wrong with creating a plan where it's not affordable to every single person. It's okay if out of 100 employees, it's not affordable to 5. Out of those 5, 1 or 2 may end up getting the credit and you may end up paying for 1 or 2. That's a lot better than having a situation where you try to make one plan that's affordable to everybody and then you have a plan that you don't even want. So target affordability, we can do those calculations for you and help you with the plan design. Just as I mentioned before, anything you do can't be purely to evade any rules or regulations. It has to have a valid business reason. You definitely want to talk to your attorney. You definitely want to understand what your goals are and help you achieve what you're trying to achieve and still stay in compliance with the law. Sample report. So this is just one report that we would be giving to our clients. We'll do an audit automatically that'll tell you, we'll do your discrimination testing, make sure that you're in compliance there. We'll do all the math for you, and based on that, the system will either give you a check mark or an X. It'll tell you if we have all the information we need for the SBCs, all the dependent information and college students and all that stuff. If we're missing anything, it'll tell you what we're missing so you can fill it out. If you have email addresses, great, it'll all be done electronically. It'll tell you if notice has been sent or if there's anything like that. So just a very quick report at the top of it will tell you what you're in compliance with and if there's anything that has to be fixed, and we're going to make it as electronic as possible. Second part of the sample report is going through and just saying, okay, so your health insurance costs for the month of March happen to be $4,300. That's just what you're paying on behalf of all your employees. In addition to that, we're going to monitor all your employees that aren't covered, and we're going to track, okay, well, John Smith in that example is working an average of 29.3 hours. Okay, so he's not subject to the full-time employee. Frank Jones might be working more than 30 hours, but he's either making less than 100% of poverty or he's making above the threshold, so he doesn't qualify also, so you don't have to think about him. Steve Sanders happens to qualify for the credit, so we're going to calculate here's how much the potential penalty is, $250, and we're going to help manage that and help you keep track of just which employees so you could be more strategic with that. And again, this is all based on the time and attendance system and what people are making wages and what their W-2 was last year and all these things and the amount that you're paying for insurance and all these things which we happen to have the information for, so we're going to help you do a lot of this work for you. Again, it's still your responsibility, but we're going to help lift that burden with you. Okay, so that's just kind of a sample of what you'd see if you logged onto our system. So last thing, tags HDR compliance. I like to call it preventative Obamacare. And what we're going to do is help you with a product in terms of the health insurance plan, whether it's self-insured or fully insured or what the actual product's going to be, and the program itself, what you're trying to do. Do you currently offer insurance? Do we need to tweak that insurance? Are you not offering insurance, or you're only offering it to your management up to now? How do you try to accomplish what you're trying to accomplish, still stay in compliance? How do we keep you kosher? And there's a lot of options to do that. There's a lot of choices. Self-insurance, taking some of the smaller penalties, managing your size, will help figure out your return on investment on all those things and give you those options and monitor them as the process goes through. We'll monitor your employees, see which ones are making certain wages, working certain hours, and do all that fun stuff for you. Compliance testing, so same way Marcia's in a bad mood in June, we'll probably be in a bad mood in December, but we'll do all that work for you. Reporting, we're going to take care of all the reporting that we saw on the prior screen. Tax credit calculation, to the extent there is tax credits, we're going to do a lot of that for you. And then education updates. This is the first major seminar that we had. We're going to have more of them in the future. The laws are going to change. Facts on the grounds is going to change, and we hope to have more of these for you. And with that, I think we are done. So hopefully you guys got an earful. So